Hi there, traders. This is Brad Gilbert with today's trading action. It's Thursday, the 7th of March. All right, now the key component here, Powell stepped up to the plate and he said the Fed is on track to cut rates this year, right? So this really sort of fires up the whole dollar weakness situation. The market has been waiting for this, right? And it's a key signal that they have not backed away from cutting rates this year. And you see a flush out of dollar positions here, Euro up, Sterling up, Aussie up, Kiwis up off the floor. You got dollar CAD down there as well. And that follows the Bank of Canada sort of sitting tight yesterday saying they're in no rush to cut rates. So we got the Fed saying they would cut, Bank of Canada. So you get that big extended move in dollar CAD. Dollar yen is obviously lower with the dollar, but this is a great time for the BOJ to come in and give it a push, right? They've been waiting for dollar weakness. It's got to come from the Fed, and we've got it. And dollar Swiss is sort of drifting a little bit lower here, right? So you can sort of see what's happening across the board. But this is where you need to come back to your sort of daily charts and try and work out, where's the best situation here, right? And if you look at the dailies here, I mean, the dollar index trading sideways, we had this nice little sort of false break in dollar Swiss. Dollar yen still overall up. And dollar CAD, well, it's coming back down here to a key level. I wouldn't be surprised to see that sort of break. Euro, pretty much mid-range. And you got these, like, they used to call them like wedges, right? Formations on your support and resistance. Sterling looks a bit stronger than Euro, but still we've got trend lines to break. Aussie sort of mid-range, as is the Kiwi. Now, I'm just having a look here at where like the action is today. And it's going to be thick and fast because now that their dollar has got some sort of direction, it's going to be easy for us to work with, right? We just need... if it's another country's data, strong data, or weak US numbers supports what Powell is sort of saying. Now, don't forget, he's up for a second round tonight, the Senate Banking Committee, I think it is. At the same time, down here, well, a little bit earlier, the ECB press conference following the ECB interest rate decision, right? No change of rates expected, right? We're seeing this across the board, but we will... If the Fed starts going, I think we'll start to see a bit of a domino effect and we'll start to see the other central banks following suit. So it's going to come down to the statement. Is it going to be like the Bank of Canada where they come out and say, look, we're going to wait. There's nothing to see just yet. The euro will go up on that, right? Because you know what? The Fed's already signaled what they're doing. And if the ECB say they're going to remain tight for the time being, that's like a hike, right? So that's where the major action is. You've got bits and pieces here, some balance of trade data out of China. Now, the Chinese balance of trade numbers are so epically large, they are a sort of bit of a factor. Halifax house prices out of the UK. Like, there's a bit of this, bit of that to sort of keep an eye on. But the two key things to look at are the speeches, Christine Lagarde and Jerome Powell, right? We're looking for a bit of follow through. Now, I can't see Powell coming out a day after his... testimony and come out and say, look, you know what, I was just joking, right? They're going to follow the plan. The plan is that they're going to need to cut rates later this year. Remember, January data was strong. It's all been crap since. So it may be sooner than later. The dollar has got a weak tone. I'm looking for something to work with. So when I look at the numbers here and I'm like, okay, well, gee, the ECB, right? Massive opportunity here. If they remain bullish, or just sort of neutral, it's like a bullish move for the euro against the dollar, right? Of course, you got to wait for the press conference to find out the final details. So my first port of call to come over here would be obviously the dollar index or the euro against the dollar. Now, it's at 109, mid-range, right? Doesn't have much to do with what we've got. But let me just show you this, like euro, right? If it goes up, it's the same as Swiss going down, right? Just because the way they are quoted against the dollar. So to me, the euro is sort of trading mid-range, right? Not a great sort of level to get in. But I tell you what, dollar Swiss is at a great level to get short dollar Swiss, right? So if the ECB remains like in no hurry to cut rates, I see dollar Swiss heading south. It's got a better setup than the euro, right? That's where I'm sort of following the game, right? I'm looking for the best technical setup here around this. And I can come back and have a look here, get right in close and tight on the hourlies on the euro. I mean, on dollar Swiss, I should say. And you can sort of see here on the hourlies, it's already broken down, right? There's a bit of an anticipation for the ECB to remain pat, and you'll see this thing break. The next trend line is at 87.60, 50 points lower, and you've got a secondary entry level there as well. To me, that looks pretty good. Of course, if the ECB come out and said that, yeah, no, we're going to be cutting rates too, well, okay, that's completely off the table. But that's where we are. We've been waiting for the penny to drop when someone, a central bank, tells us what the plan is. And Jerome Powell has done that, right? So make sure, like to me, I've just, draw on your jotter, on your trade journal, whatever you want to call it, and you write down, okay, dollar bearish. Now you might sort of think, okay, well, US equities, right, starting to cut rates, these would be going up. But it's just in the Asian session, right? You get a rebound, they just don't go up in a straight line and a down in a straight line. So there's a little bit of a weird discombobulation here, right? Now, US Treasury yields, prices are down, yields are up. But the dollar, it's not, well, it's up against a few things, but Euro, Sterling, Aussie, Kiwi are up as well. And as I said, this is the normal cycle that you're going to expect, even with the bearish dollar. Like you get the big move down in the North American session, it recovers a bit in the Asian session, and then starts to drop away again in the European session. That's how it generally works, right? So don't expect 500-point moves, 150-point maximum in a day. You'll see retracement, look for opportunities to get in. And this is where the calendar really comes back into play, because now we can piece together here. We've got dollar. When you've got a specific currency, especially the dollar, you're looking for opportunities to either go with that momentum, right? So to me, strong euro data, strong sterling data, all of these opportunities would be opportunities to get in and make some cash, right? Now that we have the answer. But this is before we, get completely crazy dollar bearish. Let's just wait to see what he's got to say today. It should set the tone. I think it sets the tone for the dollar. And if we get any inkling of weak numbers coming into the non-farm payrolls Friday, right, it's going to be on for young and old. There'll be a big sell-off in the dollar. They'll start to really factor in rate cuts in the US sooner than later, believe me. Okay, and that's where we're heading. It's great, right? This is good. Maybe not an opportunity to trade right now in Asia, but we can connect the dots with the calendar where the momentum, fresh momentum comes in, and just look for your technical levels and make sure you are having a look at the longer term levels as well, because they are going to come into play as well. The hourlies, well, that's where you're probably going to be doing your execution. So make sure you check out both support and resistance levels. All right, that's it from me, guys. There's plenty on. This is just the start of the beginning of, I think, the new trend, right? Fingers crossed. All right, have a good one. Cheerio.